Hello, this is John Sehun from InsiderSentiment.com, and today I will be talking about who ended up being right about Trump tariffs. So, as you probably can recall, ever since Trump got into office, there's been a lot of tariff talk, and it's caused a lot of market turmoil. And, different people have different opinions, but, there's been some news about certain groups of people that have, been putting their money on which way they think it's going to go, which we're going to talk about, and we will see how insiders did. And, you know, it's possible that insiders did the best, but we can save that to later in the video. So, just to refresh your memory about Trump tariffs, there's this famous picture with the board here, and it's got all these different figures on it, tariff figures, and how are these calculated? I don't know if anyone knows, but it's a very nice looking board here. And this board had real economic impact. So if we look at the S&P 500, we, at the time of this writing, have basically totally recovered. Who's to say if that's going to continue? Um, Hard to say, but just going by prices from before this sort of debacle, you can see February peaked around 61.50, and then it started falling. And by the time we got to early April, we had fallen about 10% to 5,600, and it would fall another 12% at the bottom, and it would bottom out very quickly just within the first week of April. So, but just to keep in mind for later in the video, this is where we are. Um, 6150-ish, and then 5600-ish by the beginning of April, April 2nd here. 5670 is the close. So let's look at a timeline again from a not very well trusted news source, but I think that we can just trust them for these facts here. So let's see. Yeah, basically just want to point out that, you know, this whole thing started basically as soon as he was inaugurated. There was the talk about the tariffs on Mexico and Canada, and it sort of accelerated. And we had these Liberation Day tariffs, and this was sort of the peak hysteria or peak fear, I guess you could say. So, talking about the 10% universal tariff on all imports and reciprocal tariffs on lots of countries, rates as high as 50%. And so, if we go to this was the first really good news in this saga. On April 9th, there was a 90-day pause, and of course, that is going to coincide with the market bottom here on April 9th, this pause. And I think there's some other good news. Yeah, so May 12th, um, US and China agreed to roll back tariffs for a 90-day period. So again, that was more good news. This was pretty significant. And, if we just take a look at the market, it's basically been straight up since then. That was kind of like a sign that okay, things are not going to be bad. Of course they could still turn, but at least that's where we are right now. Though, as I said, it's still uncertain. So this is an article from June 30th. So White House higher tariffs expected for nations not negotiating in good faith, and it says President Trump is expected to set tariff rates next week for countries that deemed not to be negotiating with the U.S. in good faith. Um, So just to illustrate, this is still ongoing. This whole tariff thing, whether they're using it as a tool to get, better terms, not really the point of this video. Okay, so let's look at some of the predictions that have been made. This is the Wall Street Journal, April 6th. It says Americans are sitting on a cash pile as stocks rally. So again, April 6th, we'd already fallen by 12% at this time. And actually, well, this article was updated April 6th, but I think it actually came out a little bit earlier than that. But again, there's already been a 10% correction at this point. So cash is looking more attractive these days, and the main finding from this article is investors poured more than 60 billion into money market funds in the first few days of April. So clearly, investors at large are scared. They're going into money market funds. Okay, let's move to another article. Corporate America hoards cash for tariffs over buying back stock. This is April 2nd. So again, the same sort of area. We'd already fallen by 10%, and there's still a lot of uncertainty in the market. It says U.S. companies last month announced the fewest stock buybacks in dollar terms since the COVID pandemic, an early sign of cash hoarding from worries about economic growth and the impact of the global trade war. And no one knows what will happen with tariffs. So this is the big announcement here. Basically, corporations were have record low number of buybacks. They're sitting on cash. The implication is that they are anticipating their stocks are going to go lower, and they're going to use that cash to buy back their stocks at a lower price. So from these two articles, investors at large are scared. They're going into money market funds, and corporations are also scared, holding cash and waiting on buybacks after previously large buyback activity. And just want to interject in this instance to say if you're enjoying this video, if you want to give a like or a comment, that helps the channel a lot, and also subscribe to make sure you don't miss any future videos. Okay, now let's look at what insiders were doing at this time. So this is Market Watch. This is April 2nd, so right around the same time as the other articles. And it says um, up here, the subtitle, corporate insiders took advantage of the stock market's dip in March to buy more of their company shares. So this is opposite of what we saw in the previous articles. Corporate insiders are actually bullish at this time, and we can see the chart here. This is our chart, the insider sentiment. Um, you can see at the end here, just sort of peaked above the 10-year average trend line. So we interpreted that at the time as a bullish signal. And you can see there's a quote here. The pickup in insider buying is good news because it means that insiders expect their company shares to recover soon, right? So if insiders are, happy to get a discount on their own company's shares, if they anticipate it's going to go up. So that could be an explanation for this uptick in buying that we saw at this time, when again, investors and corporations were showing the opposite of that behavior. So just to recap, tariff fears accelerated in April. The market was already down 10%. Investors were fleeing to money markets, corporations holding cash to buy back stocks at lower levels. Insiders, on the other hand, were picking up shares at this time. So insiders were sending a bullish signal, while the other groups were sending a bearish signal. That is significant. And just to bring the point home, this is insider sentiment. This is our website. This is what our users will see, our subscribers will see. And so here's the March 1st figure, and the April figure was actually higher than the March figure. So, um, insiders continued buying their own company stocks after that period, after that April period, and coinciding with the further correction and then recovery. So insiders basically were not scared during this time. They were buying their company shares back, and that's all for now. And see you next time.